Welcome to Investor Web, where we decode the complex world of finance and investments for you. In this digital age, the way we exchange value has drastically evolved. Traditional financial systems are being reshaped by new-age digital currencies, and Bitcoin is at the forefront of this revolution. Here at Investor Web, our mission is to demystify these complex topics and make them accessible to everyone. We believe that understanding is the first step towards smart investing. Today we're going to explore the economics of Bitcoin. We'll break down the intricacies of this digital currency, analyze its economic properties, discuss its impact on the global economy, and speculate on what the future might hold. Whether you're a seasoned investor or a curious novice, our aim is to provide you with a comprehensive understanding of Bitcoin economics. So buckle up and let's get started on this exciting journey into the fascinating world of Bitcoin economics. Bitcoin, a term we hear quite often, but what exactly is it? Imagine a world where you could send money to anyone, anywhere, at any time, without the need for a bank or a government to oversee the transaction. A world where financial freedom is not just a concept, but a reality. This is the world that Bitcoin promises. Born from the depths of the 2008 financial crisis, Bitcoin was created by an unknown person or group of people using the pseudonym Satoshi Nakamoto. The pioneering cryptocurrency was introduced to the world in a white paper titled Bitcoin, a peer-to-peer electronic cash system. But what does that mean? Well, let's break it down. Bitcoin is a digital or virtual currency, but unlike the digital money in your bank account, Bitcoin doesn't exist in a physical form. It's not a coin or a note you can hold in your hand. Instead, it exists purely in a digital form, stored in a public ledger known as the blockchain. The blockchain is a revolutionary technology that records Bitcoin transactions across a network of computers. This decentralized network, maintained by volunteer coders and run on thousands of nodes worldwide, ensures that no single entity or government can control Bitcoin. One of Bitcoin's most notable features is its limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity, akin to gold, gives Bitcoin its value and protects it from inflation, a problem that plagues traditional currencies. Moreover, Bitcoin transactions are pseudonymous. While all transaction data is public and traceable, the identities of the people involved are not. This feature provides a level of privacy, though not complete anonymity. Lastly, Bitcoin is divisible. The smallest unit, known as the Satoshi, is 100 millionth of a single Bitcoin. This divisibility makes it accessible to people at all economic levels, not just the wealthy. So Bitcoin is not just a digital currency, it's a revolution in financial systems. This cryptocurrency, with its decentralized nature, limited supply, pseudonymous transactions, and divisibility, has the potential to reshape the world of finance as we know it. Now that we know what Bitcoin is, let's delve into its economic properties. Bitcoin's unique economic properties set it apart from traditional fiat currencies. One of the most crucial aspects is its limited supply. Like gold, Bitcoin is finite. There will only ever be 21 million Bitcoins in existence. This scarcity is hard-coded into the Bitcoin protocol, making it resistant to inflation. In contrast, fiat currencies can be printed at will, leading to inflation and in some cases hyperinflation, devaluing the currency in the process. Next, let's talk about divisibility. Each Bitcoin can be divided into 100 million units known as Satoshis. This extreme divisibility makes Bitcoin versatile and adaptable, capable of serving a global economy. It also allows for microtransactions, something that is not feasible with traditional currencies due to transaction costs. Durability is another crucial property of Bitcoin. Unlike physical cash or even gold, Bitcoin cannot be destroyed. As long as you have your private keys or seed phrase, you can always access your Bitcoins no matter what. This durability makes Bitcoin a reliable store of value. Last but not least is portability. With Bitcoin, you can carry billions of dollars worth of value in a simple hardware wallet or even memorize a seed phrase in your head. Try doing that with gold or large amounts of cash. Furthermore, Bitcoin can be sent anywhere in the world almost instantly, making it incredibly efficient for cross-border transactions. These properties make Bitcoin similar to gold and other valuable assets, earning it the nickname digital gold. However, Bitcoin goes a step further with its programmability and the ability to execute smart contracts, features that gold and traditional currencies simply do not possess. Bitcoin, with its unique properties, challenges the traditional economic models. It offers an alternative that is decentralized, transparent, and resistant to censorship. As we move forward into the digital age, the significance of these properties cannot be understated. Bitcoin isn't just a new form of currency, it's impacting our economy in significant ways. Let's dive into how. First, let's look at transactions. Traditionally, when you make a transaction, it goes through a bank or a credit card company, which takes a fee. With Bitcoin, transactions are made directly between parties without the need for a middleman. This is known as peer-to-peer transactions. It's faster, cheaper, and can be done from anywhere in the world. Now, because Bitcoin isn't tied to any country's economy, it's reshaping the global financial landscape. It's offering new investment opportunities. Bitcoin has shown incredible growth over the past decade, making it a potentially lucrative investment. This has attracted a new breed of investors, ones who are tech-savvy, ready to take risks and looking for high returns. But let's not forget, with great rewards come great risk. Bitcoin's value is highly volatile. It can skyrocket one day and plummet the next. This unpredictability makes it a risky investment. But for some, the potential for high returns outweighs the risk. Bitcoin is also challenging traditional regulatory bodies. Because it's decentralized and operates on a global scale, it's difficult for any one country to regulate. This has led to a lot of debate among policymakers and financial institutions. Some see it as a threat to economic stability, while others see it as an opportunity for economic growth. Furthermore, Bitcoin's anonymity has raised concerns about its potential misuse. It can be used for illegal activities such as money laundering or funding terrorism because transactions are hard to trace. This has prompted calls for stricter regulations. But despite these challenges, Bitcoin's impact on the economy cannot be ignored. It's changing how we think about money, how we transact, and how we invest. And as more people start to use Bitcoin, these changes will become even more pronounced. As we can see, Bitcoin is not just changing the way we transact, but it's reshaping the entire economic landscape. With all its potential and challenges, what does the future hold for Bitcoin? That's a question on many minds today. As we navigate through the unpredictable waters of cryptocurrency, it's important to consider the possibilities that lie ahead. Firstly, let's discuss widespread adoption. Bitcoin has already made significant inroads into our economic system. Many businesses, large and small, are starting to accept Bitcoin as a valid form of payment. This trend is likely to continue, leading to a future where Bitcoin is as common as traditional currencies. Imagine a world where you can buy your morning cup of coffee or even a car with Bitcoin. It's not as far-fetched as it might sound. Technological advancements are another key factor in determining the future of Bitcoin. Blockchain, the technology that underpins Bitcoin, is still in its infancy. As this technology matures, we can expect to see new applications that will enhance the functionality and utility of Bitcoin. These advancements could make Bitcoin more secure, easier to use, and more efficient, further promoting its adoption. However, it's not all smooth sailing. Regulatory challenges pose a significant hurdle to Bitcoin's future. Governments around the world are grappling with how to regulate Bitcoin. The challenge lies in balancing the need to protect consumers and maintain financial stability with the desire to promote innovation and competition. How these regulatory challenges are navigated could have a profound impact on the future of Bitcoin. The potential for Bitcoin to revolutionize our financial system is immense, but the path to this future is fraught with uncertainty. There are many potential roadblocks along the way, and the journey is likely to be a bumpy one. So what does the future hold for Bitcoin? The truth is, nobody knows for sure, but with its growing adoption, technological potential, and regulatory challenges, it's a future that's both exciting and uncertain. The future of Bitcoin is uncertain, but one thing is clear: it's here to stay, and it will continue to influence our economy. As we wrap up this discussion about the economics of Bitcoin, let's summarize the key points we've covered. We started by demystifying Bitcoin, understanding it as a decentralized digital currency without a central bank or single administrator. We then dived into its unique economic properties, including its finite supply, divisibility, and transferability. We also explored the profound impact Bitcoin has had on the economy, creating a new asset class and shaking up financial markets. It's not just about the potential for high returns, but also about how it's reshaping our financial systems systems and encouraging us to think differently about monetary policies. Looking ahead, Bitcoin's future appears bright despite market volatility. Innovations in blockchain technology, rising adoption rates, and increasing recognition from traditional financial institutions suggest a promising trajectory. Thank you for joining us on InvestorWeb. If you found this video helpful, don't forget to subscribe for more insightful content. Until next time, keep investing wisely.